Our next guest has been checking the options market and expects shares to move 6% for Nvidia in either direction on its after-the-bell report this coming Wednesday. That's the lowest expected move predicted since 2023 for an earnings day. So how should you position ahead of that big report? Joining me now is Chris Murphy, co-head of derivative strategy at Susquehanna. Chris, all of this earnings season, we've seen some of the implied moves happening on the heels of earnings coming in less than what they have been over, say, the last 8 to 12 quarters. Nvidia is no different. Are you expecting that same kind of muted approach to those earnings with the stock reaction afterwards?
Yeah, I am. I mean, I think the options market, especially in something like Nvidia that's so actively traded, does a really good job handicapping these moves. If you rewind to this time last year, the options market was pricing at about twice as big of a move, and we certainly have seen some surprises since AI really became a thing back in 2023, and we had some of these blowout moves. But it's so under the microscope. Everyone's talking about it. Everyone's focusing on it. It's almost like the line at the Super Bowl. Everybody has an opinion. Everyone's doing a lot of research, and it really does find a pretty fair price, fair value for what the expected move is.
Chris, in many cases in the markets, that volatility often comes with gaps in information, right? The people who know things, the people who are trying to play catch up. Does it say to you that given some of these implied moves that we are seeing being less than what they have been historically, that the market, that investors have become a little bit more in tune with just what the expectations are? In other words, that information gap between players and participants has narrowed.
100%. I totally agree. I mean, I think that even just thinking about a retail trader having access to ChatGPT or whatever else, they have all the information, or almost all the information that the most sophisticated hedge fund investor would as well. I do think there's a bit of a leveling out of information. Maybe companies are doing a better job with their messaging. Investors just have a better handle on what their expectations should be. But I think a big part of it is the leveling out of information flow.
Nvidia is not the only AI name that is part of this kind of leveling out. We are also seeing some moderation and moves around some of the other big names in technology around AI. Do you feel as though that's a sign that there is a maybe maturing aspect, not a fully matured aspect, but this idea that people are now a little bit more aware of what's going on with the artificial intelligence trade?
Yeah, it's not surprising everybody like it did a couple of years ago when Nvidia reported earnings and traded up 24%. So that's a part of it. I do think that over the last couple of years, selling volatility has been an attractive trade. So anytime anyone has a chance to sell what they think is elevated volatility, they're going to come in. A lot of people are going to try to sell those dislocations. So that can dampen moves as well. When that side of the trade is so much bigger than the side of the trade that's looking to buy volatility in the option.